A very good afternoon to everyone who have joined. Thank you for joining. On behalf of the Development of International Trade Services and WTO Directorate of ICIC, I warmly welcome all of you to this Global Udan Series 30. Today's webinar, Decoding US Financial Statements, the requirement of global outsourcing firms, promises to be both timely and impactful. As we all know, India has established itself as a trusted hub for global outsourcing in finance and accounting. Yet to truly excel in this space, professionals must go beyond technical skills. They must understand the language of the financial reporting, whether it is revenue recognition or leases or under GAAP or SEC disclosure requirements. So it becomes a business imperative that strengthens trust, enhances compliance, and opens doors to global opportunities. This session is designed to bridge that gap. Let me introduce myself. My name is Kamal Kishore. I'm a chartered accountant for more than 15 years, and I worked in GCCs, earlier banks, before moving into training. So I'm into finance training, and I will introduce our speaker for the day, Ms. Ritu Raval. She's a chartered accountant with over 13 years of experience in accounting, audit, financial reporting, compliance, with a specific focus on US financial statements and offshore delivery models. She's worked extensively with US CPA firms and global outsourcing organizations, supporting accurate, timely, and scalable financial reporting. Her key areas of expertise include preparation and review of US GAAP financial statements, month-end close, reconciliations, and management reporting, MI reporting for the US entities, financial modeling, forecasting, and analytical reviews, managing offshore accounting workflows, and quality controls. Currently, she is working in Big Apple Accounting and Advisory LLC, New York-based CPA firms, handling 20 plus US clients on a recurring basis. So without taking much time, I will want to hand over this session to the speaker for the day and share her insights on this topic. Yes, over to you, Ritu. Thank you.
Thank you so much. I would like to thank the whole managing committee to provide me a chance to share my views with all of my friends. Good afternoon, everyone. I'm C. Ritu Rawal, and I'm delighted to speak today on the topic decoding US financial statements. That is my core expertise area, that is requirement of global accounting firms. Over the next 90 minutes, we will travel together from the big picture of US GAAP to the practical checklist that you and your teams can use from tomorrow for US clients. I hope many of you are already working for many US clients and many of you are still looking for this opportunity. Let me begin with the context. The United States is the largest capital market in the world, and US GAAP is the language in which those markets read the financial performance. So, we will study first about the US GAPs and how the financial statements are presented through US GAPs. Let me share my screen with you so that I can easily share all the details with you. Give me a second. So let's start, everyone. For Indian accounting firm, the ability to understand and apply the language correctly is no longer a differentiator. It is a basic requirement to win and retain high quality US work. In today's world, where we connect globally, but the US gap is mostly adopted in many countries, especially in US, because US gap and IFRS basically the same. The main difference between the two is US gap follows rule based and IFRS whereas principle based accounting standards. Let's talk about US GAAP. US GAAP is US GAAP in the US GAAP we use ASC code. That is ASC stands for Accounting Standard Codification, which is single authoritative code for US GAAP. That is maintained by FASB. Generally, if I can explain that Financial Accounting Standard Board, like as I say, like as Indian Accounting Standard Board. US GAAP is basically like as Indian Ind AS that we use in Indian accounting. Just a second. Yeah. The ASC codification is a single authoritative source for US GAAP, which is maintained by Financial Accounting Standard Board. It provides comprehensive guidance for all the accounting topics. It is strictly follows rules. There is no changes in the rule. Like as when we talk about the IFRS basically principle based uses principle based approach where they use the professional opinion uh, and the interpretation that required technical application on industry specific. But when we talk about the US GAAP only follows rules that has been predefined. They will provide the rules for industry specific that has and that should be strictly followed when you are preparing the financial statement under US GAAP. Let us understand what makes a standard US statement financial package. Typically, sorry, typically a complete US set includes balance sheet and the income statement, the statement of cash flow and the statement of shareholder equity, along with the notes of accounts for listed companies. For listed company, there is a separate item is required that is called MD and A. When we generalize this thing, MDA means management discussion and analysis. Each of these statements tells a different part of story. Like as in India, they are also prepared all these statements, and these statements are linked like as these statements are linked in India because the income statement is our profit and loss statement, balance sheet is the balance sheet in the US, and the cash flow statement. And when we talk about the cash flow statement, they don't use direct cash method. They use indirect cash method for the cash flow statements because in India, some persons prepare the cash flow statement in using direct method, but in US, indirect method strictly followed by them. And these statements are interconnected because, as you know, from income statement, profit transfer to the balance sheet, and from the cash flow statement, non cash items will be transferred to the balance sheet, and the cash balance should be transferred to the balance sheet. So these items are already connected. When we talk about the financial statement does not just consist the balance sheet, income statement, or cash flow statement. These also includes notes of account that is mandatory for a complete set of financial statement. In the notes to accounts, we have to mention that which accounting practices or accounting policies have been followed. Which like as we prepare notes of accounts in the as per the Companies Act in India, all the details should be mentioned in their notes to accounts, like as for inventory valuation, which method should be used. Let me explain you that we cannot use LIFO method in IFRS or Indian accounting standard, but in US GAAP, LIFO is allowed. So we need to explain each and everything that from where the data has been arrived and from how we have recorded it, because without US GAAP we cannot explain to the client that from where the data is coming and how we are showing the data to the here, because US clients strictly follows rules and regulations, and if there is some problem or they didn't show up the clearly, this penalty is very huge, so they are very particular about the books and accounts. So we need to be very careful while preparing the financial statements or any kind of work that is related to their books. So it is our responsibilities that we can prepare the books as per their laws, rules, or regulations, and US GAAP must be followed properly. So let's talk about the topic. In your day-to-day accounting work, you must be asked to prepare the financial statement, review the financial statement, or analyze one of these statement in isolation. However, your real value in an offshore professional comes from seeing how how they connect, and from being able to explain a US client not just what numbers are but why they have looked like. So to understand this, I have bifurcated the webinar to the three parts. In one part, we will decode a step financial statement, that is a US income statement, US balance sheet account, and notes to account. And in the second part, we will uh, we will see the example along with the recording of the financial statements, that how the uh, how the financial statements have been prepared, and how the monthly accounting statements or accounting report that is required by US clients, and what in the practical, and how and where the US gap is adopted by the US clients, and when they ignore the US gap or uses cash basis system. Okay, so let's move to the content. Now let's come to decoding the financial US income statement. Here in the slide you can see that US in the slide you can see that revenue to net income flow, how we calculate the revenue to net income flow. This is same we use for the Indian financial statement, but there is just the differentiation between the Indian income statement and the US income statement is that we follow the rules, we follow the US gap for preparing the income statement in US, and we use Ind AS in preparing the financial statement in India. On a typical US income statement, we start using revenue or sales. After that we will after that we need to calculate the cost of goods sold, like as we do in India, that leads to gross profit. Then we can have the gross profit in the income statement. Now you can see here is the gross profit. We deduct the operating expenses from them, and operating expenses in the US generally called as SG&A, and the full form of SG&A is selling, general, and administrative cost. Selling, general, and after reducing the selling, general, and administrative cost, we need to we are here to we have calculated the operating income. After that, we need to calculate other income that is not related to business, and other expenses in a separate after the operating income. And after that operating income, other income and expenses, when we calculate other income and expenses, then we reduce the tax, and then we come to the conclusion of net income. So sorry. So when you work on the US books from India, your first decoding task is to understand the client's revenue model and cut-off practice. You need to look closely at the timing of revenue recognition. That is the main difference under the US GAAP and IFRS, because there is there is the difference between US GAAP US GAAP ASC 606 and IFRS 15 is basically the timing of revenue recognition, when the timing when revenue should be recognized, treatment of discounts, returns, and allowance, and whether any performance obligation, how much span is there, and if we use multiple periods, if there are multiple periods, how my performance obligation and when should be transferred. Basically, the main key area is when the control should be transferred as per US GAAP and as per IFRS. After reaching the goal, we can identify that this is the revenue, this is the sales for my specific period. Similarly, you must help the client about classifying expenses correctly, because after classifying the expense correctly, you can these financial statement will be using for the income tax return, their income tax return to the IRS. Like as here are direct tax in the US. These are called IRS. We have to file the income tax returns to the IRS, and there should be a huge penalty if we file something wrong or misplace anything. So the client may have some issue in this. So let's talk about the topic. Uh, So we are talking about the expense classification here. So expense, when we classify the expense correctly, this classification directly affects the gross margin, operating profit, and how US investors read the business. Many US CPA firms will ask you to compute and comment the key ratios such as gross margin, operating profit, EBITDA margin, and year-to-year growth, like as we have done already in the India. And the one thing that mostly clients require is the burn rate calculations. In the US, burn rate calculation asked by the most of clients. And when you are applying a loan in the US, the burn rate calculation is must for them. So let's have a look on the prepared monthly reporting summary. I will share one thing with you that when they ask about the EBITDA margin or any ratios, the client is not just required that we just prepare the income statement and balance sheet and hand over to the client. This will not they required some trend analysis charts and brief commentary like as some summary that we can share and highlight so that the client can easily understand if he is from non-accounting or non-commerce background. So, what might require management attention require that we need to share some trend charts or some summary. I can share you a monthly accounting summary or of monthly financials. You can say that for a client. I can share with you so that you can get a proper idea. Let me give a minute. Yes, can you see my screen? Okay. Yes. This is a financial statement. This is the monthly reporting that have been prepared by me for one of my clients. I cannot share the client details or names with you. This is basically a US client and is a metal company. So I have prepared the November financials, but still there are some issues because some transactions which we are not able to categorize, they put it under uncategorized expenses or like as we put in as suspense account. So I have changed the uncategorized expense to the suspense account so that you can all have a look. So look at the income statement first. This is the income statement. Like as you can see, first line item is their income. That is the construction income. As per the requirement of client, we have renamed the ledger to construction income. And after that, discounts will be reduced from then we will arrive at the total income that we have understand right of just now 5 minutes before. After that, we need to calculate the cost of goods sold. Here is the cost of goods sold for the clients, that it is a metal company supplies and materials for the metal company's cost of goods sold for them. And then we conclude at the gross profit. Here is the gross profit. And please let me know if I'm too fast because actually I know I speak very fast. I'll try to slow it down so that all of you can understand properly. Because maybe some of person who are fresher in this field. So here are the expenses. Let me show you. These are the expenses month by month. Okay, these are the expenses like as we do expense categorization in India. Mostly companies do expense categorization as per US GAAP. And let me tell you one thing, some small companies which do not follow US GAAP, they will prepare the financial statement as per Schedule C. And the Schedule C, there are some specific ledger and they will prepare the financials or income statement by using these specific ledger that we will discuss later in this webinar. So after that, here are the expenses that have been booked by the company. And after that, there are total expenses, and then we come to calculate net operating income. After net operating income, we will put other income, but in this case the client doesn't have any other kind of income. So here are the other expenses that the client had. Some kind of reimbursement expenses, that is the other expenses for the company, and some suspense account. I have renamed it for you. These are the uncategorized expenses that client had to provide us the detail that for what purpose they have been spent, or for whom the payment has been made. So for the time being, we have put that into the suspense account. And now we we calculate the net income. This is the net income. But the many clients doesn't want that. This is the basic, the easiest one I have shared with you. So we have calculated here the sales trend chart so that it look effective to the clients, and we can share this chart in the email also for the summary, executive summary, so that client can understand and check the details from the emails. Also no need to open the excel sheet or anything. Here we have provided some expenses summary so that the client will come to know that how much profit in the specific month and what are the top five expenses for the company. I hope I am able to clarify these things to everyone. So let's now move to the topic. Now let us decode the balance sheet and the statement of shareholder equity. Yes. Now let us decode the balance sheet and statements of shareholder equity. In the US practice, the balance sheet usually starts with current asset, and that is arranged broadly in order to liquidity, like as cash, marketable securities, accounts receivable, inventory, and after that followed by PPE. PPE, full form of PPE is property, plant, and equipment, like as fixed asset in India. In the US, they use the word PPE, and intangible, after that intangible, and after that other long-term asset. On the liability side, we see current liability such as accounts payable, accrued expenses, short-term debt, credit cards, long-term debts, non-current liability, and then finally in the last there will be shareholder equity. For the registered LLC, like as we use share capital word in India, in US they will use common stock. For share capital, they use common stock if there is a share capital. Okay. As outsourcing team, we spend a lot of time on receivable, inventories, and payable. And for receivable, so we must understand that the test the client allowance for bad and doubtful debts, because US GAAP is a forward-looking estimate for the credit losses. For inventory, we also need to check that which formula is used. Like as US GAAP, I already told you that US GAAP still permits LIFO method, where IFRS does not permit the LIFO method. So this choice can be affect the profit and taxes. So we need to check all these things thoroughly. It is important to understand each line item and their effect in the financial statement. So let's come to the next point. Let's come to the shareholder equity. In shareholder equity, as I told you, that share capital is commonly called as common stock in the US, and like as you will see in shareholders equity, common stock. After the common stock, there will be additional paid in capital, and after additional paid in capital, retained earning, and that is already used in India, and sometimes some accumulated other comprehensive income, and also there in the shareholders equity. So our job when decoding equity is to reconcile opening and closing balance like we do in India, track new shares issue, that how much new shares have been issued, and buybacks, dividends, stock-based compensation, and profit transfer. We need to check each and everything and ensure that the movement is tied with the cash flow, that we have reported all these things in the cash flow and income statement, so that these statements will not disagree in common. This will affect on the complete financial statement in isolation. So let me provide you a look at the balance sheet items. So everyone, here is the balance sheet that have been prepared for the US company. As I have told you that in the balance sheet, the current asset on the top, like as you can see here, current asset and liquidity, like as bank accounts, cash in hand. These are the bank accounts. Uh, Let me tell you one thing that mostly US clients which have medium-sized business, they use separate accounts. One account is specifically using for the payroll payment so that they will easily reconcile the payrolls. Payroll plays an important part in the US accounting. So they will open a specific bank account in the US bank, and that account is specifically used for the wages payment and payroll taxes payments. So as you can see that here are one checking payroll account that the client has opened to pay the payroll and payroll taxes. And these two other accounts, chase and checking, are normal business operation accounts where they will receive their income and they pay other expenses or cost of goods sold from these accounts. And cash in hand account is the cash in hand they have along with that. Okay, now let's move further. Here the accounts receivable, you can see that you might get one problem, practical problem that I need to tell you, that sometimes what happen, the client provides you the bank statements to prepare the books, and along with that, the client already doing, they're issuing invoices, sales invoices to their clients, and you do not have any information about that. You are preparing books and the sales in sometimes sales invoices that are in that will be placed in accounts receivable will not match up with the amount you receive. Suppose a client is issuing invoice to Mr. A about 10,000, Mr. B 20,000, and in the bank you will be receiving 70,000 from Mr. A, or sometimes you do not understand from where you are getting the money, just with the description that counter credit deposit or something else. So you need to ask for the accounts receivable uh, from the client month by month, because they have the information that how much invoices have been issued to Mr. A and how much payment received from Mr. A. It will become your work very easy to prepare accounts receivable and reconcile the accounts receivable balance. That is very important, because sometimes if the amount you will not find that you will receive from Mr. A or Mr. B, you will directly put that amount to the sales, and this will affect your income statement, and if income is affected, the balance sheet is also affected. So we have to take complete charge and ask each and every information from client, and do not take our assumption or estimates that we can book here or something else, because this will create a huge mess. Sometimes the client come that from this that this problem has happened, and please clean up their books, and this will take much more time than preparing the books, because each and every item reconciling and find out uh, from their statement and from their invoices will create a huge mess and take a lot of time. So if you get any cleanup project, please put it on hourly basis, not on a fixed basis, because it will take her huge time for reconciliation in the AR or something. It's quite a big mess. So let's come to the next topic. This is the undeposited fund. This will help you a lot. Undeposited fund is what? Uh, because if we are preparing books on cash basis or we are preparing books as per our own, and the client is issuing the invoices, he know that he is receiving money. If he use the bank accounts, the amount in the bank accounts will be doubled, like as I actual receipt have been parked by us or any other accountant in specific ledger, and the client has already shown the receipt amount, so he will use the undeposited funds. He will put the amount that he has been received in the undeposited funds, and these undeposited funds balance will be matched up from the bank statement. That the Then we clarify that this fund has been received in the bank account, and this will make the work very easier to reconcile accounts receivable with the undeposited fund. This is the ledger undeposited fund. Okay. Now these are the total current asset that this client have. Now let's come to fixed assets. In the fixed assets, here the client has some trucks for their transportation, material transportation, something. And the PPE, as I told you, plant property and equipment, this is a common fixed asset in the mostly US companies. Then we calculate the total fixed asset. After that, we came to other assets. Here, the total asset. Assets part is complete. Mostly US clients have this kind of assets, and we need to show them like this. Earlier, at the first, we need to show all the current asset, after that fixed assets, and after that other asset, and then the total assets. Now let's come to the liabilities and equity. In the like as we have shown current assets in the asset side, now we will show as per US GAAP, the financial statement must show current liabilities at the top, and current liability, all of you already aware about that, what is current liability and what should be in the current liability, like accounts payable, credit cards, or some short-term liabilities that are current liability. Now we have a look for the now we have a look at the accounts payable. Under current liability, these are some accounts payable. As you know that if we are preparing books on the bank statement basis, the client must have some invoices. The invoices the client will provide to you. So you will book the invoices in the books and prepare the accounts payable. There is no big difference or no big reconciliation work in this field. The most reconciliation work that have been arises in the mostly US with the US clients. One is the accounts payable and undeposited fund, and second one is the bank accounts. Third one is the payroll. These three things that require in-depth reconciliation with each and every point. So let's move further. After the accounts payable, here are the credit cards. These three credit cards, the client have been used. And after that, some kind of payroll liability or some government liabilities, that other current liabilities. After the current liability, there are some other current liabilities. After that, we will move to the long-term liability. Long-term liability, like as some loans, long-term loans, some director's loan or something. After that, in the last equity. This is not a company corporation that uses share capital. So here are this is a basically a single member LLC. So here are you can see the opening balance, equity and personal expenses, retained and net income. There are no common stock here. I will share you some example later with the corporation that uses common stock here. So here are the balance sheet. Actually, guys, I have a question that how will the client agree with the hours we put in particular work? That's US 50 hours for a particular bill is in place. Yes, mostly US clients. Mostly US clients will agree to the hourly work because some clients that are uh, already dealing with some client, some other country people that are overcharging them or faking them will not agree. But mostly, let me tell you about 80 to 90% clients will pay you hourly because I have done work with many US clients and many US CPAs. Mostly US CPAs also pay you hourly because they don't have any fixed kind of contract, fixed kind of work, or they will pay their employees on even on hourly basis. So the mostly clients will pay you around 80% clients will pay you hourly basis. And this is the best option because sometimes the client is messy, client is big, client is small. Somewhere sometime it will take 5 hours, somewhere it will take 20 hours. So we don't know. Or after seeing the transaction number, sometimes the transactions is too low, and sometimes the transactions are very big. But when the transactions are low and transactions are big, it will take time, depend on the transaction. But along with that, sometimes the opening balances will take much more time because the financials were messed up or something we need to do. So it is better if you work on the hourly basis. Actually, I'm also working on the hourly basis for most of the client. Sometimes some new client that do not pay trust or something else, and for some kind of short-term project, they want to do it on fixed price contract. But 80 to 90% clients will pay you hourly for sure. And if you want any guidance that how you can acquire work from US market, I can help you with that too. Okay, so let's move to the next point. Now, let's move to the most powerful but often underused statement that is called the statement of cash flow. Every US GAAP cash flow statement is divided into three sections. As you all know, we prepare the cash flow statement in India under indirect method. Which three sections are there? One is operating that we do in India, and then other is investing, and then is financing. We prepare in India cash flow from operating activities. Second part is cash flow from investing activity, and third part is cash flow from financing activity. So this is the cash flow that US clients require the cash flow from prepared based on indirect method. Every US cash flow, gap cash flow statement is divided into three segments, as I already told you. So starting from net income and adjusting to non-cash item like depreciation, amortization, as we do in India, and stock-based compensation, as well as change in working capital, same as India. We need to compute the income from operating cash flow from operating income, operating activity. Now let's move to the one point I need to tell you that I forget to mention a key decoding point for Indian team is classification, like as under US GAAP, interest paid and interest received or dividend that are shown as operating cash flow, whereas dividends paid are usually shown in financial section. As we will just a minute. Yes. As you can see that under US GAAP, interest paid, interest received, and dividend received both are in operating activities. And dividends paid are considered as the financing activity while preparing cash flow statement in the US GAAP. This is a basic difference. Just US cash flow statement prepared under US GAAP and the cash flow statement prepared under the IFRS. Whereas IFRS follow more flexibility in this classification. So if you have used IFRS or NDS, you must be careful about these things so that you can apply these things correctly as per the while preparing the cash flow statement under the US GAAP. And what about the cash flow in India, we will ignore, or some clients does not require the cash flow statement. They will use just profit and loss and balance sheet. This is the Indian mentality for many of the clients. I don't know this is true or not, because I have worked with many Indian clients, and here they will require these two things, balance sheet and P&L. But for US clients, cash flow statements, they will call it statement of cash flow. This is mandatory. Most of the clients require it, but the some monthly clients will not ask for the statement of cash flow, because when you prepare a complete set of financial statement, this is part of financial statement and will be required with the annual financial statement. Because monthly clients, sometimes some clients will specific ask for statement of cash flow, and some clients does not require it. So we will move on to this area as per the client's requirement. If you I'll tell you, if you provide some extra when you are preparing the book, statement of cash flow will automatic will be prepared by you. So I must recommend you to share this with client too, because it is always good or benefit to you if you provide something extra. So for let me tell you about the cash flow statement. For outsourcing firm, cash flow analysis is a high value service, because they will pay much more than if for preparing the statement of cash flow than preparing for balance sheet or P&L. So this is a high value service. Some CPAs specifically working on this segment also, that they will prepare the statement of cash flow. They will not provide any other service or any kind of. So they have acquired this segment specifically, and US client usually pay more for the statement of cash flows and the for preparation of forecasting. These two things are much important for the US clients to acquire any loan from the banks or to show to the investors. So for if you have specifically grasped the area or work on the statement of cash flow, you can just simply provide this service only, because forecasting and the statement of cash flow, you can charge much more than the profit and loss and balance sheet. Okay, so let us discuss the why the statement of cash flow and why they are ready to pay much more for the statement of cash flow than the profit and loss and balance sheet. As you know, from the statement of cash flow, we can help the client to understand that if a profitable business is facing cash stress or not, or loss making business is why a loss making business is still cash rich. So we can provide this information to the client by separating non-cash charges and working capital swings, and one of facing for the investing transactions. So a simple reconciliation and a short commentary turns the routine statement into the actionable insight for the client management or lenders. So for this purpose, for this purpose, the client will pay you more, and they have a much concern about the statement of cash flow. This will if the your cash flow is good, your business is cash rich, the investor will invest more in your business, or the lender will pay you more money for your business. Because if you will go to the US bank and apply for a loan, they will ask for last 3 to 5 years of financial statement, along with statement of cash flow, and for next 5 to 10 years forecasting. Generally for 5 years they will have for financial forecasting for the next 5 years. And one more thing, the burn rate calculation. They will ask for burn rate calculation. Burn rate calculation is nothing other than the cash burn, that how much cash will be burned in the future years. They use burn rate to identify the business health. So I think that's it for the statement of cash flow. Now let's move to the next topic, that I have identified, that US GAAP and IFRS, that what is the key difference. Because rest of the world uses IFRS in the most of area, but in US GAAP is preferred mode. But some companies that have subsidiary in outside US, they will prepare the financial as per IFRS, and you can get the project like as if the client has prepared the financials on US GAAP. They will ask you to convert it as per IFRS. Sometimes this kind of project you will get, and they will pay you much more amount than you think for just converting the financials from US GAAP to IFRS. For this, you have to understand what is US GAAP and what is IFRS, and what information and how information treated in US GAAP and how the information is treated in IFRS. I'm not able to guide you on each and every US GAAP or IFRS, because it is a very lengthy, or I will say a huge things, that we cannot do this in webinar. But I will try to explain some main differences that have been uses in preparing financial statement in US GAAP and IFRS. So the basic three differences that I have understand from my past experience. If you are converting the US, just hold on a second. If you are, yes, if you are converting the financials from US GAAP to IFRS, or from IFRS to US GAAP, you must know that what is the difference and how you can rectify it, or how you can change it. So so far I have done many projects on this, and from my practical exposure I need to tell you that mostly three areas are there which needs to be changed. Rest will be rest, like as expenses, will be treated equally, same as in US GAAP and same as in IFRS. Okay, so let's talk about this. There are many recurring areas for difference, but revenue recognition, inventory method, and lease and impairment, these are three basically areas that will differentiate the financials prepared in US GAAP and in IFRS. Okay. First, let's talk about the revenue recognition. Revenue recognition follows a five-step model in both the US GAAP and IFRS. Both uses five-step model, but under US GAAP, the guidance are specific, industry specific. That I already told you that US GAAP follows rules, and these rules are specific, and they are very strict to the rules, that if this must be done in this way, that will be done in this way. They will not change anything. So if we talk about the IFRS is generic, more generic in this way. They have mentioned some principles, and on the basis of principle, we need to recognize the revenue. Okay, so there in the IFRS, they will take professional guidance. So and if you mention that if you mention that as a professional, that this should be done in this way, in a pattern and you explain each and every situation as per IFRS, you can do this. But in the US gap, if this thing is done in this way for this industry specific, it must be same as this. So the main difference of US gap and IFRS is the timing in the revenue recognition, that when the revenue is recognized, and the main thing is for revenue recognition is control in each and every accounting standards, that when the control is transferred, the revenue should be recognized at that time. And the main procedure, the main thing we need to understand, that revenue recognition, that when the control is transferred, this is the difference between the US GAAP and IFRS when the control is being transferred. So, and the other thing we need to check, that while shifting the financials from US GAAP to IFRS or IFRS to US GAAP is inventory. Sometimes what happen, mostly US GAAP, mostly clients that will use US GAAP are using LIFO method, because LIFO is permitted under the US GAAP, as I told you earlier, but it is prohibited under the IFRS. So if the method has been changed, as you know, that if the inventory valuation method has been changed, the cost of goods sold changes, profit changes, and the tax changes, and the many things in the balance sheet also changes. So this will change, I think, the most of the things in the income statement and the balance sheet. So, second, you need to check the inventory method, which inventory method has been used for preparing the US financials. So this you can know about the notes from the notes to financial statement. As I mentioned earlier, the notes to financial statements prepared a big role in the US financial statements. That is the main part of the set, and there you need to mention that if the financial statement have been prepared by using this method, or which inventory valuation method has been used. So the second point, you need to check that inventory methods, that which inventory method has been used, and how you can, what is the difference between US GAAP and IFRS, and how you can change the calculations, and what it will make effect on the balance sheet and income statement. I think you all know much more better than me, because this is what we are doing from the our CA journey. So next, the other thing is that we need to change US GAAP to IFRS financial statement is leases and impairment. That how the how we will amortize lease and impairment, how it is used in US, and how by using US GAAP, and how it will be used by IFRS. This is the main difference that we need to check, and we need to figure out, and changes the financial statement accordingly. So after changing all these things, these details in cash flow and balance sheet also show you some meaningful valuations. So these three things that you need to change for the US GAAP, and key difference. Actually, I need to tell you one thing, that as an outsourcing partner, your role is to recognize when a transaction that seems standardized under IFRS style or US GAAP, but might have a different treatment. As you know, that sometimes the same thing have different treatment under US GAAP and as an IFRS. So you need to check and escalate such cases. So after using the technical review, and do not assume anything. If you don't know anything, please ask from client, ask from your CPA or your CPA friend or something who is expert in this. But while preparing the financial statement, I strongly suggest, please do not assume anything on your own. Like, if you say that we have traded this way in the India, let's use this to the US client, use this for the US client. Do not assume, just ask the question from the client or from the CPA, or seek proper guidance for this. This is, I need to tell you, and this is the most critical area, that changing the financial statement from US GAAP to IFRS or from IFRS to US GAAP, because very few clients require these things, because the clients that have subsidiary outside US will require these, and they will pay much more amount for this. And this is very critical work, because if you're understanding the US GAAP or IFRS gone wrong, the whole financial statement will be gone, or you will present the wrong financial statements to the client, and if the client will rely on you, this will be a proper blunder if that financial statement have been presented somewhere. So please be careful while using these things. Now, actually, I'm getting message that my speed is very fast. So let me go slow with this. Actually, if you do not get anything that I have explained earlier, please ask me. I will repeat that thing specifically. I will try to reduce my speed. So now let's talk about some practical outsourcing requirement. What is practical outsourcing requirement? How what they require from us, and how we can cope up with them to work for the US clients. Um, so let us now translate all this into practical outsourcing requirements. As I told you, as I have shown in the PPT image, that these services are typically offered by the Indian chartered accountants, Indian accountants to the US CPAs or US clients. The first is bookkeeping and data processing. So bookkeeping and data processing mostly used by them using QuickBooks and Xero. That is their accounting certificate, and sorry, that is the accounting software. And to work on this, if you want to gain trust of the client and acquire more clients, you need to take a certification from these softwares. You can use the take the certification by using the trial version of the software. QuickBooks certification is mostly required by the US clients and US CPA firms, so that you can do their bookkeeping. This is just for bookkeeping, not a proper high level accounting and prepare financial statement, forecasting, and all these things. But most US people trust if you have the QBO certification, which is called for the QuickBooks, and Xero certification. There are some other softwares for the bookkeeping and data processing, that is like as we use Tally in India, but in US mostly use 90% people use QuickBooks Online. Earlier it was QuickBooks Desktop from 10 to 15 years earlier, and now completely clients have been moved from QuickBooks Desktop to QuickBooks Online. Only one or two that really used bookkeepings were using older version, that is QuickBooks Desktop. So next requirement. Sometimes the client required month end close report. They will provide you the monthly statements or monthly data, monthly invoices, monthly data. You need to prepare the books for the month and provide the client to monthly financial, as I have shared an example with you for the monthly financial statement and income statement and balance sheet. Third service that is required by them is accounts reconciliation. Sometimes their account will not reconcile. Most of the client doesn't know about the reconciliation also. Some small clients, they just provide the data to the client, to the accountant or any bookkeeper. They will just post the transaction doing the bookkeeping, and does not even reconcile the bank accounts. That is the main key area, that you know that reconciliation reconciliation must, but the client even does not aware about it, and the previous bookkeeper also provide the financials to without reconciliation. So some clients just only require the accounts reconciliation services. We need to reconcile their bank accounts, their AR, as I told you earlier, credit card statements. These things we need to provide reconciliation on this. And sometimes the client required management reporting. What is management reporting? Management reporting is provide an executive summary along with the ratio calculations, like as we do in India, EBITDA and some fixed asset ratios. These kind of ratios they required in the reporting provide an executive summary from using the financials that have been prepared by their accountant or bookkeeper. We just prepare the management reporting using some notes of accounts, using some calculations and ratio, and show them to the by using graph or charts. Fourth is the audit support service. This service generally these services generally demanded by demanded from the client by the CPAs. They will provide you this type of contract if you have a CPA degree. If you don't have a CPA degree, they generally do not ask for audit support service. But sometimes some CPAs that will hire Indian CAs or Indian accountants having much experience for the audit support service, so that the audit can be done by us, but they will sign and after taking a review, they will sign the financials and provide that to client. And the next is controllership function. Controllership function is as in we can say that controllership function they will required is that you need to check. You can say that like as we do internal audit in India, like in the US, they will ask for the controllership function that their accountant or their bookkeeper will prepare the books or do the accounting. We just need to take an eye or need to check that the work is being done, so that the at the time of when the financial year close, the books are already ready for the CPA. So that CPA will check the books and prepare the returns according to that. This is basically a kind of internal control service. For the internal control, you also need to know about the bookkeeping and accounting for the US clients. If you know about these things, you can do the you can do the internal control on them. Okay. Just give me a second. Yes. Uh, let me let us discuss that why they will require Indian CAs to work for them, because we will do the work under the 50% cost generally. Because if you go to the US, their minimum rate for an accounting is $50 to $70 for us junior. I am talking about the junior clerk or junior account bookkeeper. But in India, they will pay us $30, $40 per hour generally. Sometimes some clients pay $10, $20, but generally they will agree to pay you about $30 to $40 on an hour, and they will provide the services much more than their junior staff. As you know, we all have trained well, and um, actually we have gained some expertise because all of us are chartered accountant. Basically, this is the toughest course that I am known. So we will provide extra value. This will create value creation to them, and provide coaching, and much more than that, we are more efficient than them. Because when you start working with many US clients or US people, they will work too slow. Specifically, we are more efficient than them. Suppose if a US person is preparing books and he will do this in 10 hours, and that work we Indian chartered accountants can do in 4 to 5 hours, especially 3 to 4 hours. So let's some talk about that. Whatever we have understand till now, when we do this well, we will move up the value chain from data processor to being trusted extension for the US clients, so that we can also work their finance function, their bookkeepers, their accountants. As I told you earlier, that we can offer many services and we need to provide many services. If we provide them some specification, some extra, they will hire more from the India. So as we move through the rest of session, we will take some live example of US financial statement, uh, walk through a key line item and some typical notes to accounts that US managers expect from India team or chartered accountant or as accountant, we work them. And before that, I will show you the example for the annual financial statement for a client for the 2024. And before that, let me tell you some practical insights. No, let me show you the financial statement first. After that, we will move to some practical insights that you should know. Give me a second. Uh, can you all see my screen?
Yes.
Okay. Yes. For the client privacy, I have removed the name and details for the client. So here in the first page, there will always be the firm's logo. For, like as if we are working for CPA firm or we have our own CPA firm, we can put our firm logo, firm detail, name, address, and contact number, each and everything. Uh, for our firm who is preparing the financial statement will be there, that I have removed from here. And here it is the name of client. This is the financial statement for the period. Now let's move to these are the main page for the that what is this file consists for and for the period and prepared by whom. Okay, now there is a list table of content that what is the part of financial statement. As I told you earlier, the financial statement will consist of 5 parts. I will explain you again that one is income statement, second is balance sheet, third is statement of cash flow, fourth is notes to financial statement. But the fifth one is that I already shared you, that is for the corporations or registered companies. This is the MD&A. MD&A means management discussion and analysis report. This is not in that part is not in this financial statement because it is not for a register company. And now let's move to the balance sheet. This is the balance sheet for the US client. In the balance sheet, as you can see that we have mentioned that as per US GAAP, current asset should be on top and the fixed assets will be after that. And after that, there will be other current asset. But This is not a registered company and it is a small company that is using preparing books on cash basis. So no US GAAP requirement are here, and they have not followed the US GAAP in this case. So this is their general balance sheet and income statement template that is required by clients. So that's why the fixed assets are on the top here. The next is the liabilities and equities. As I told you that this is not a registered company, so here are the member equities. If it will be, it is a registered company, common stock will be displayed here. Mm. Next, come to the statement of income. This is a statement. This is the financial statement for the same client that I have shown you for the monthly reporting. This is the same client, and this is the previous year financial statement. This is a statement of income. This have been prepared for 2 years completely. Like as for the 2020 year, 2024, this is the current year, and this is the previous year. Like as we prepared in India, this is the revenue. After that, cost of goods sold, that is direct cost. After that, gross profit, and after that, after gross profit, this is the general administrative expenses, generally called as G&A in the US, selling general and administrative expenses, and we can say that operating expenses. After that, depreciation, and we can conclude to the net profit. And this is just a members equity calculation that the profit is being transferred to the members equity so that it directly shifts to the balance sheet. Like as we accumulative, we will transfer the profit to accumulative profit. Now let's move to the statement of cash flow. Here you can see that the statement of cash flow is prepared in that by using indirect method, because all of the US clients require the statement of cash flow by using indirect method. They do not use direct method, as I told many times. This here the indirect method cash flow, that cash flow from operating activities, and then cash flow from investing, and after that cash flow from financing activities. After that, we will come to know about that how much cash increase and decrease during this period, and we are just the opening. Sorry, we are just the we will add the opening balance to the current period cash, and after that we will come to know about the closing cash balance. Now let's take a look. That is the main part. Notes to the financial statement. This is the main part that is my purpose to show you the annual financial set. Um, Now let's come to the notes to financial statement. This is the financial statement notes. First topic, we need to mention that nature of business, what kind of business the company is doing, and what is the date when the management review the financial statement. After that, uh, how the property, equipment, and depreciation is calculated, and which method is used, whether we have used historical cost method or fair value method, and how we have categorized, how we have recognized revenue and cost for the specific period, and what we have changed from the previous year. This is also required to be mentioned that what needs to be changed from the previous year, like as we have mentioned in Indian year, that the change in accounting policies, cash equivalents, that what are the debt instrument or short-term liquidity, what are the part of cash equivalents, and inventory, how it is valued, and what are the contract receivables, and what are the income tax, and how we have calculated this, and what is the market risk. Now we just this is the basically policy part. Now we have to provide the calculation for the some points like as how we have calculated the depreciation. This is the depreciation chart as we prepared in the India. This is the in the US they have called the depreciation schedule. This is the depreciation schedule, and after that the calculation of equity that we have already seen in the uh, lowest part of the income statement. This is the SG&A, selling general and administrative expenses, and the part of them that these expenses we have considered under the SG&A to calculate the SG&A. This is the end. Yes. We have actually recorded the income statement, balance sheet, and statement of cash flow and notes to the account. Now, let me provide you practical insights that that must be worthy for you, or you can get much more help from that. So, the first thing I need to tell you that small business in US will not follow US GAAP. They will prepare financial statement as per Schedule C if they are not C corporation or S corporation. So, let me say in Indian language, if they are not registered company, they will prepare their books as per Schedule C. What is now? You will ask for what is Schedule C. Schedule C is a Schedule C is a US federal tax form. Okay, in Schedule C, they will provide a format for profit or loss from business. Like as if we prepare an ITR for business income, we have some specific section, section 36, section 32 depreciation, section 36 expenses. Like they have also prepared a Schedule C where they have provided a format that these are the expense head, these are the revenue head. So if there is a single person, single member LLC, and some sole proprietor which have not been registered, some independent contractors, basically we call them a small business person or small individual, self-employed professionals. They will not use the US GAAP. They will not follow the US GAAP or prepare financial statement according to this. They will just prepare the books on cash basis, and while preparing the books they will use the Schedule C information. In Schedule C there will be specifically 15 to 20 ledger names, ledger accounts. They will book the expenses according to that or income according to that, so that it will easy for them to show them to the tax return. Basically Schedule C is an extra for a US tax form, that is Form 1040 filed by the US persons. So, what is the purpose of Schedule C? Let me explain. Schedule C is used to report the income and expenses for small company, as I told you, that sole proprietorship, single member LLC, or independent contractor, a small person like as very small entities that is not registered as C Corp or S Corp. This is treated as disregarded entity for US tax purpose. So Schedule C is basically tells that how much a business earned, what expenses were incurred, and whether the business made a profit or loss. These things are generally shown in individual personal tax return. So they will use this method, and mostly one more thing that I think I have skipped, that when we talk about the financial year, in India, financial year and calendar year is different. But in US, for most the client, financial years and calendar year is same. They used January to December calendar year for preparing of books for financial purpose, for tax purpose. Now, I think what I have more to tell you. Yes. This is the last part that I earlier told you that in the next 90 minutes, we will travel from understanding from US gap to a checklist that you will use from acquiring data for your US client from tomorrow. This is the checklist that have been prepared that these are the different segments. Suppose this is a checklist for income statement. If you are preparing the income statement, this is a checklist for balance sheet, and this is a checklist for cash flow statement, and this is for outsourcing process. Okay. Let's talk about the income statement. In income statement for revenue recognition, we need to check these things. After checking these things, we just need to write down the status that whether we have checked these things or not, or any specific area or some problems we can see there. We can write it down here. These checklists will be followed, prepared for different client by different way. This is a general checklist that I generally followed for preparing books for a client. And the next part is expense classification, that how we classify expenses. Let me tell you one thing that when we classify the expenses, we should be very particular and very aware about that, because if you are preparing books for small clients using cash basis, then too the expense categorization is very important, and is should be accurate one, because there are some deductions that will be provided to some particular area while preparing US tax return, like as for meals there are less deduction, for travel expenses some expense will be disallowed, like as we have there in Indian income tax, there are some disallowed expenses under section 40 or something, and in US there is also some kind of expenses that will be disallowed. So we need to prepare the expenses categorization uh, to the point and accurate, because there will be some expenses which are deductible and some expenses which are not deductible. This will impact their profit and this will impact their income tax return. That will be, if there is a mistake, that will be uh, a big mess and will lead to penalties in that case. So we need to be particular about the books expense categorization and revenue while preparing the US books. Next is gross margin, whether the we need to compute gross margin. Sometimes there are no manufacturing, no industry, or some small clients, like as a contractor comes to me and ask for a books preparation or financial statement preparation. Then what he will do, he will just provide me a bunch of bank statements and ask me for the preparation of books. So in this case, there is no gross margin or no. We just need the we just took the schedule C and books prepare the books accordingly, that this is the revenue, this is the expense, and this is the specific head for the expenses, and calculate the profit or in net profit for that person, and will provide him the financial statement. He will go to the CPA or any tax preparer, and that tax preparer will use the financials and prepare the taxes according to that. This is a max requirement that a client must will require. Generally, if you are preparing books on monthly basis, the client will require these things. The trend chart and variances analysis will required rarely by clients, but if you will provide these things to the client will much more happy, and it is better for you and client too. Now, there is a balance sheet checklist that we have done the current asset review, allowance for doubtful accounts, what inventory method has been followed, what are the PPE cost, and are there any kind of invoices? One main thing, if you have put anything in the PPE, plant property and equipment, you must this must be followed by an invoice. Without invoice, please do not book anything under plant, property, plant, and equipment. And the next is intangible assets, accounts payable, credit card. And one more thing, please reconcile all the bank accounts, credit cards, and accounts receivable. I'm telling you this many times because sometimes they will just the clients come to us and get the books and they will not reconcile, and this will create a big mess. So always do reconciliation before finalize the income statement and balance sheet. These are some cash flow checklists that what are the investing activities, what are financing activity, what are non-cash item, what are operating expenses. These are the cash flow checklists. This is the checklist that you can acquire from me or use this for your clients. And let me conclude that this. Yes, come on, and let's come to the topic. Let me conclude this. If you are a fresher or new comer to the US accounting segment, you just start by small businesses. So that if you are working for them, step by step, you will come to know about the big companies financial using US GAAP, and after that, you will move to the next segment, that is specialization in cash flow and financial forecasting. That I think is much easier for us chartered accountants, but for them, for US person, there is a huge demand and they will pay much more. And it is quite interesting that preparing forecasting in the specific format or preparing the cash flow statement is much easier. So you just need to grow step by step. That's all from my side. All the best. So please let me know if you have any questions.
Yes, thank you, Ritu. I think it was a good time. I think we spent last 90 minutes. I think you went step by step, okay, explaining the basics, okay, the financial statements in terms of understanding the financials, okay, at a very base level, which I think is very, very helpful. And also going through the nitty-gritty. So I noted few points, and also we have a lot of questions. So I'll be taking some of those questions also. I think I thought I will ask my questions first, but then there are one common question which is coming up is how do I get work from US?
Sorry, how do I?
How do we get this work? How do we get the
How do
work?
we get? Actually, there are many kind of there are many steps that you can get work from this work. I'll tell you my journey, how I can get this work. From the starting, I have worked for many European clients while I was in job doing in Gurgaon. And after that, when I got married and shifted to Hisar, Haryana location and left my job, I had started I had started working in a consultancy firm. They will use Upwork for the foreign clients. And I left my job after my first baby, and I just take a start on this, that let's try it once. So I have just create a profile on Upwork and started my journey from there. There are many freelancing sites from where you can start and increase create your profile and upgrade that. Many like as freelancer.com, Fiverr, and Total, Guru. But I have created a profile on Upwork, and I was working on Upwork from for many times. So I think this is the best for me. Actually, I have in the starting when you need to acquire your first client, it is quite a bit difficult because you need to start bidding and continue bid, and your first project will let me say, when you try for your first project for 1 to 2 months after continuous practicing or trying, you literally, when you are starting fed up, the client will come to you and ask for work. And then, if your first project is completed successfully with a 5-star rating, your profile will go up, and then you can acquire more clients. And after that, if you have successfully settled on the Upwork and you will get $20,000, $30,000 annually from the Upwork. Then you will directly move to the clients, because till that time you come to the know about the nature of the clients, their requirements. You can directly approach to the CPA firms by emailing. But as I think that from my experience, from the direct email to US clients, the work will never come that way. The Upwork or other freelancing platform is better from the direct email to the CPAs. But along with that, you can go to the US or which specific area you want to work after, and you can personally meet the CPAs firm and then start a contract with them, that you can provide outsourcing, because the first target should be CPA firms in US, because if you go to the direct client, they will not trust you. The CPA firms will trust you and provide you work with the starting with a lower price, and after that they will increase your compensation. If you want, I can show you my Upwork profile.
Yes, we have time. I think if you can quickly show that, so I think it should be useful to the audience. Meanwhile, I think another question is, I think our qualification is more than sufficient. A chartered accountant is more than sufficient. So this question is, do we need any additional qualification or any additional certification?
Actually, you need, there's no such specific requirement, but if you, as I told you earlier, for accounting and bookkeeping, they preferably recommended QuickBooks certification honor. So you need to, if you are starting, if you are doing start in US accounting, I recommend you to create a trial account in QuickBooks Online and Zero. And after that, you can go there in education segment, and there are two tests for QuickBooks certification 1 and 2. First exam is bit easy, that you can just do it by your own within some time, and you can get the certification instant. And the for the QuickBooks online certification 2, that exam is quite difficult, and you need to just understand and work in the QuickBooks thoroughly so that you can get the certification. Once you get these two certifications, the client you will get trustworthy for the client, and client will easily provide you the work so that you can start on it. So earlier it was the only one certification for QuickBooks, that is difficult. But I don't know from last year or from when they have started this two certification. One is quite easy. If you acquire one, you can you can start working as a bookkeeper for any of US person, and there is no such specific requirement. If you have time, or you can do, you can go for US CPA, that is equal to, like as we are in CA, that is US CPA. You just get the signing authority or PTIN. PTIN is a number that is required by that is required for filing US tax returns. And US tax returns have more much money from the preparation of financial statement, but is a quite typical preparing US tax returns. So that meeting is only provided to enrolled agent, that is TRP in US, and the US CPAs. So I don't think there is much requirement to settle in the accounting segment in US. But if you do the qualification, good for you, and that is best for you. Let me show you, just a minute. Let me show you my Upwork profile. This is my Upwork profile. As you can see this. Here you can see the QuickBooks certification. This kind of certification you will get. Also, along with that, there are much more certification if you can acquire, like as I have done this discounted cash flow modeling. This will help you to acquire the projects of financial modeling or statement of cash flow forecasting, etc.
All right, that's good to see. So yes, one question I had was, so you're talking about cash flow and forecasting. So you said there are a lot of clients who are willing to pay more for cash flow and forecasting and not for P&L and balance sheet,
Right.
right? Or rather, so what is the reason? The forecast, yeah. What is the reason? What is your thought process behind that?
Uh, as per my opinion, because US clients trust more to the on Philippines, because Philippines have the same study kind as US people follows, and Philippines are ready to work on the accounting and financial statement part for $3 to $5 per hour. That is not acceptable to us as Indians or as a chartered accountant that we work for $5 per hour. That is not acceptable. They will usually acquire Philippines to do this kind of work. So if you have knowledge for financial forecasting, cash flow, or statement of cash flow, as we already have, we just need to recall it or doing some changes in that. And this is the best thing that I think we can do in this segment, that if we have ability to do this, why to go for the bookkeeping or accounting? I would recommend to go for the forecasting and cash flow that we can do easily. And for accounting and bookkeeping, they will pay $5, $10 per hour, and mostly to the Philippines, because Philippines are ready to work for $2 per hour also. That I have seen in my career for many clients. So I would suggest this, that this should be your key area. You can start with bookkeeping and accounting, no problem. You can get clients, good clients also, that will pay you $30, $35, $40 for accounting. But mostly clients or small clients will go for the Philippines, that will charge much lesser than us.
All right. So what the next point is how important it becomes. So this one, the question which I had, the knowledge of taxation law in the US. So which is IRS, if I'm not wrong, right? Because many times, as I think you were also talking about in your presentation, that it is important to know which expenses are allowed, not allowed, and all those aspects. So that also becomes important, right? When I prepare the financials and I'm providing these kind of services.
Yes, US tax knowledge is very important, but this is not that you cannot do the financials or preparing the books if you do not have tax knowledge. Because if you are preparing the books for any small client, as I told you earlier, that are using Schedule C, you can get the specific Schedule C format. You just need to proper categorization in that while doing the accounting. But we cannot prepare the income tax returns that will be submitted to the IRS, because we do not have the tax knowledge. If we have the tax knowledge, we can do much better and prepare the returns also. But there is not much information needed, or we do not need any certification in the taxation to prepare the books. Because what is deductible, what is non-deductible, that work will be done by their CPO, tax return preparer.
So one another question is, how do I know beforehand, like how much time it is going to take for any particular assignment? So what will happen generally? What happens generally? Do we need to tell like how much time it is going to take? Any estimate kind of thing?
Like as I'll give you an example. I recently received a contract from a client. He will provide me the bank statements and data that consist of around 18,000 transactions. and he will ready to pay me $1,500. That is not acceptable because posting of just 18,000 transactions, if our office staff is also doing that, will take much more time, and after that reconciliation take much more time, and finalization, review, and preparing financial will take much more time. I will estimate the time like as if I think that work can be done in 10 hours or 15 hours, and I'm charging $35, $40 per hour. I will ask the client for that, and this much, and this is the minimum amount you need to pay, so that I can work, or otherwise I will reject the call.
Okay. So another set of questions are around. So one question is, what kind of businesses are interested in outsourcing their work, or in terms of size, which kind of businesses are like in terms of size?
Actually, the small and medium business and CPA firms are much interested in outsourcing work, because if you have big business, you have in-house accountant or in-house team to work on that. So mostly you will get the client that are small or medium size, or the CPA firm that are handling the work for many clients will be interested in outsourcing, because they will get low cost and efficient working from us.
Okay. One, this question is, okay, it's specifically with reference to QuickBook, right? So the QuickBook services from India, the access for these QuickBook services from India are stopped because they have stopped their online platforms recently. So what do we do?
You can go to the US QuickBooks sites. I know the QuickBooks Online in India has been stopped, and the reason they have provided that the Indian clients are not much interested in using QuickBooks, because first it is costly for Indians, and mostly Indians use Tally. Sometime today time sometime some clients start using Wave or any cloud accounting software, but mostly clients, 90% of Indian clients still using Tally, and they will having the cost to run a business in India, and it is not profitable. So they have stopped the QuickBooks Online in India, but you can use QuickBook US. You just need to go to the QuickBook US official website and just create a trial account. They won't disallow you to create an account by using Indian mobile number or Indian email ID. You can create your own account in the QuickBooks Online US website.
So one question I was having was with reference to IFRS 18 applicability. Okay, so because starting 2027, right, IFRS 18 is applicable in India also, in AS 180 is applicable. So the entire format of the P&L is going to change, where you're going to prepare P&L. The format is going to be profit and loss from operating activities, profit and loss from investing activities, something like that. So any major impact we can see, or how should one prepare, because that is going to have a impact across the board in terms of presentation, be it India or the globe. So yes, your thought process on that.
Yes, as we talk about IFRS 18, just a presentation has been changed. As per my opinion, that the income should be calculated, and in that way, expenses should be calculated in that way. Just a matter of presentation.
Yes, probably maybe larger companies, bigger companies may have the impact in terms of how their
Yeah.
financials are analyzed. Maybe smaller firms may not have.
Yeah, small.
Yeah, you're
Just
right.
this is just a presentation from that.
Correct. Another question I was thinking, another point I was thinking is with the tools, okay, AI tools and all.
Sorry, actually,
The AI tools, right? So using AI tools, you can prepare the financials. I think that will happen sooner or later, right? So I have come across situations where the some of these AI tools are able to reconcile also, do reconciliation also. So In that case, how is that going to impact our work?
Actually, it will increase our efficiency. That this will not impact our business because AI is a machine, but the machine should be operated by the human beings and who have knowledge to operate the machine. So we must understand the AI tools to improve our efficiency. Like as we are talking about the QuickBooks Online. QuickBooks Online also has emerged some AI tools that will improve our works. Like as in the previous time when AI tools were not there, we need to categorize the expenses or income as per our opinion, or we need to check sometime the past that in the previous year how it had been done and how we have to work on it next year. But in the current scenario, if you work on QuickBooks, here the AI campaign is so much faster that if you are posting a transaction, it will show you that in the previous period this transaction has been posted as this much, and this is the this payment has been made to this person for this purpose, so that you can easily categorize that.
Identify.
And this is the and the AI has inbuilt that you can automatic posting the transactions by that way, but we need to check each and every transactions. That will be because sometimes AI can beneficial for us, but sometimes it can disturb the books, so we need to check each and everything. It will, I think AI is more much useful for us. It will improve our efficiency, it will reduce our work. So I think AI must be promoted.
Yes, it must be promoted. I think better. The earlier we also adapt it, we also start using it. So as I said, the efficiency point becomes more important, right? We should try to use the technology and reduce the work and add more value. I think that should be the objective, right? Properly said. So another set of questions also. Okay. So now there is this convergence also, right, between IFRS and GAAP. So GAAP is converging to IFRS, right? So then this is only going to become easier, or how this convergence happens? Because what I understand is it is happening phase by phase, or particular standard by standard. So uh, what is that I should be prepared, like as a service provider? Is there anything I should be looking at it also?
Yes, actually, this is the most typical part that when it comes to conversion of US GAAP to IFRS or IFRS to US GAAP, and we need to understand. First, we need to check that which US GAAP have been followed in the preparing the financial statement, and we need to convert it in the IFRS. But what we do, I generally tell you the simplest way. What we are doing, we will prepare the complete books as per IFRS if we have to convert it from the US GAAP, because we ask the statements from the client and we will prepare it from start to end as per the IFRS, so that there will be no points should be misplaced or skipped from that way, and the financials will be prepared completely, because the client will provide us the financial statement as per US GAAP and will ask you to the just change it as per the IFRS. But and some accounting policies, actually some accounting policies or some accounting calculations that was never inbuilt in that how it have come or what policies have been used. So for taking precaution, what I have done in my past, I will do prepare the books from scratch, from starting to end using the IFRS. But I have observed that these three things that I have already mentioned, the revenue recognition, lease and impairment, these things are, I think these two, three things that need to be changed in US GAAP to IFRS.
So one question is, okay, how do we present ourselves to the client, like in terms of establishing the credibility, right? So one question is, what are the basic infra requirements expected from the client?
There is no such basic
Yeah.
infra requirement. You just have a computer and high-speed internet connection. That is okay for the client, and just you need to be just presentable or talk to him with confident. There is nothing much more requirement that in that. But yes, if you have any experience with the past US client or any Indian company, that is working for the US clients, and or any specific certification, like as I have told you, QBO advisor certification, QBO pro certification, you can display that too, so that the client have the more trust on you, that you can do the books for him as per the US accounting standards while sitting in India.
Yeah, that is what we have. So some questions are relating to indirect tax and all. I think may not be relevant for this topic. So because we're talking, focusing more on accounting outsourcing. So one thought I was having is, so when will the client calls happen? I think it should happen late in the night or early in the
Yes.
morning.
Yes,
Hmm.
when you have less experience, the client code should be in the ES time zone, Eastern Standard Time Zone.
Hmm.
And when you have attained that experience, and you have the your profile as rich, you can quote your time to the client is comfortable. So generally, in the starting, I used to talk to the client in the night around 1 to 1:30 a.m. And after that, now I have gained so much in the trust and these things. So generally, I will talk to the client in the around 9 p.m. in India, or mostly 9 p.m. in India, or earlier morning 5:30 a.m. Generally, 9 p.m. is most the time when I communicate with the client.
So I think yes, these are the questions I have. I think I've taken most of the questions from the clients, from the audiences also. So yes, that was very useful and good to know that you have progressed in your career personally as well as professionally, having a baby, managing all this work. So wonderful to know. Yeah. Yes. Any other question, Gunjan, from the audience? So we'll just wait for Gunjan to confirm if there is anything.
Okay. Actually, I have some question that is asked by the audience. One is, do softwares like Xero and QuickBooks prepare cash flow statements like auto-generated? Yes, all the softwares, whether it is Xero, whether it is QuickBooks, the cash flow statements are prepared auto-generated. And one more thing, when we prepare books in the QuickBooks Online or Xero, generally we use accrual basis accounting method, and we can just switch that to the cash basis by just one click. So if you are preparing books as per accrual basis, and you need to check that what it will be on the cash basis, in QuickBooks there is just one click button. You just click on that button, the books will automatically, financials will automatically convert to the cash basis. Actually, someone has asked me, do we need get any certification in accounting, or as per US GAAP? You can get the certification, but it is not as such required to do the accounting or bookkeeping, as I told earlier. Apart from Upwork, many other platforms that are useful for US work, that is TopTal, People Per Hour, Fiverr, Guru. On Guru and Fiverr, there are many US clients other than Upwork from where you can get these clients. For USA indirect tax returns, like as if you want to be a sales tax expert, you need to study on that. You need to keep study on the sales tax return that how it is filed. And this same feature you can get in the QuickBooks Online also. They also have prepared the income tax return and sales tax returns too. And you can get some videos that can you can get from the YouTube. Or the other is that you can do job in some company that is providing these kind of services to the US clients for some time, so that you can get practical exposure on that too. And next, last question I have received, that what is the requirement for filing the basic IRS returns? Basic requirement is that you have 18, that is compulsory for the US tax filing, and you have the knowledge that how to file and what return is to file. You just have the knowledge that you can do the income tax return, file to the IRS, and you have the 18. You can file the income tax return in the US, which is basically provided to US CPA and EA, that as I have told earlier. EAs are enrolled agent, that is tax return preparer in the US.
Correct. I think this is what we have. So yes, I think we should be concluding now. So as I conclude today's discussion, thank you so much, Ritu, and thank you everyone for joining. So as I conclude today's discussion, one thing stands out clearly is uh, it is not only about mastering the technical standards, it is about building trust, credibility, and tapping the opportunity in the global marketplace. For outsourcing firms in India, this knowledge strengthens our ability to serve the international clients with confidence and precision. By embracing US GAAP, IFRS, SEC disclosures, and the broader reporting framework, we position ourselves not only as service providers but as strategic partners in global finance. The global Udan series, okay, by ICI continues to remind us that when Indian professionals align with international best practices, we elevate both our individual careers and our nation's role in the world of financial services. So thank you so much for joining and for your time. And I would again like to thank ICAI and the entire Udan series team for giving me the opportunity to moderate this session. It was very wonderful having the speaker here and the audience for their questions as well and the interaction. Thank you so much again, everyone. Thank you.
Thank you, sir. Thank you all. Yeah. Okay.